Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me to the new week. Well, it's been a very interesting price action over the last 5 days for the Australian dollar, and with many mixture of influences has kept the bulls and bears pretty much busy over the last 5 trading days. First of all, we did have a move towards the low region and posted a low of 77.12 before rebounding very strongly in front of that support that comes in at the moment at 76.85, which harbours the bull camp. Now, if you look at the weekly uptrend, you can see that the market is holding towards either 76.85 or 75.70 as two key crucial supports. Therefore, I do expect to see at least the first one challenged this week at 76.85, and then we'll see whether the market can actually move lower. Since the break of the 60-day moving average, is the fact if we just put that in just for a second here, you can see that we're still clearly pretty much underneath this level. Known also as where the hedge funds tend to step in, and you can see here from the sell-off, most probably they have been in the market selling. Overall, I do expect to see further weakness into the coming week. Now, we do have tomorrow the RBA monetary policy announcement. It is viewed that the market will probably stay unchanged at a record low of 1.5% official cash rate. More importantly, though, is the statement. The reason behind that is that last week we had the Federal Reserve newly appointed chairman who did sound a bit more hawkish and are expected to move rates on the 21st of this month. So this may keep further initial downward tests for the Australian dollar. Overall, resistance on the day comes in at 78.0520 as a sell area, and immediate support comes in at 77.40, with 44 being low so far this morning. Interesting to see the market did open slightly firmer earlier this morning, but nevertheless failed to sustain towards the resistance of 123.7580 after getting the high of 67. I still expect to see further weakness and move away from this region and look towards the downside where this neckline comes in, which is supported from the bearish double top reversal. Now, a break beneath 121.80 to 122 figure would give further indication to the bear case and open the way towards 118 as a potential target. Initial support on the day, though, comes in at 122.65, which is still, at this moment, still under threat. Well, the dollar-yen case is a bit puzzling, but nevertheless, the market is still, from a technical point, a little bit mixed, even though we have had two rejections from 105.55. At present, we're right on that level. Now, if we get a break underneath 105, this would leave me neutral in the short term, and I don't have any view, and I would like to see how the market actually plays out underneath 105. Partly the reason behind this weakness is yen crosses, and then right across the board with Aussie yen, Euro yen, Sterling yen, is the fact is that the yen case has been the bullish or the strongest leg, and this has put a bit of pressure on the actual currency itself. Well, the pound, since rebounding off 137 figure, is now questioning whether the market can sustain. At the weekend, there was some conversation from Theresa May, whose speech set out 5 principles that would govern Britain's post-Brexit relationship with the European Union, and rejected the claim the UK is cherry-picking, saying all trade deals are bespoken. She sounded confident that the right deal for the Brexit will reach for Britain, though a no deal would still be better than a bad deal. So overall, I still, from this pattern, expect to see further weakness. To me, this is a flag from the pole, so the next move should be down, and I'm looking towards a re-challenge of 137. And a break beneath there would give further exposure to the 135 region, with the resistance on the day seen at 138.55. The gold outlook, since it's rebounded last week very firmly in front of that bullish camp or foundations at 1,300, has maintained its gains and still holding and looking towards a resistance at this stage of 1,326. I'm not overly bullish, purely for the fact that we are expecting to see a rate hike possibly this month with the out of the US. It could put a bit of a dampener towards the upside. But on the day, range of 17 to 26. And to round off with oil, I'm not overly bullish on the recovery on Friday. Nevertheless, where we are at the moment still gives us opportunity to sell into, and I do expect to see further weakness coming into play and look towards $59.25 as initial target, and also where this short-term uptrend comes in. So that wraps up for today. Thank you very much for joining me, and I hope you have a wonderful start to this new week.